viewers, welcome to my channel. I'm Hasham. So now I'm going to start the next topic in our subject, Advanced Corporate Accounting. The topic in this video is electricity companies. So how to make the financial statements of electricity companies. In this video I'm going to explain you in detail the theoretical part of electricity companies. Earlier I have completed holding companies. The last video I have completed holding companies in the subject of advanced corporate accounting. So in those videos I have explained you in detail how to make the consolidated balance sheet of holding company and its subsidiary company. So if you have not watched those videos, I suggest you to go to the playlist of my channel. Select the subject Advanced Corporate Accounting, select the topic holding companies. So many videos I have uploaded explaining in detail regarding how to make the consolidated balance sheet. So now, apart from that, if you are new to my channel, I suggest you to visit the playlist. I have uploaded so many videos on different subjects like financial accounting, advanced accounting, managerial accounting, cost accounting, corporate accounting, business statistics, income tax, and financial management, investment management. So many videos I have uploaded. If you are craving the knowledge of your subject, select the topic, select the subject, watch the video and increase the confidence on your subject. Now, I'm going to start electricity companies. Watch the video till the end if you want the complete grasp of the subject. Don't skip in between and don't join in between. That will not give you 100% benefit from these videos. So, electricity companies. There are many public utility concerns which are formed by the government which provides services to the public like gas, electricity, water, railway companies. These are called public utility concerns because their objective is not only to earn the profit but to provide the service to the people. So these organizations, electricity companies, water department or gas or railway companies, these are formed by passing a special act in the parliament. By passing a special act in the parliament. So this act will define, explain how to make the financial statements of these companies. These are different companies. Definitely they want to earn the profit to sustain, to maintain their operations. But their objective is not only to earn the profit, but to provide the service apart from profit. They need profit for survival. Without profit, the organization cannot function. The profit is needed, but that is not the ultimate objective. Example, electricity companies. The objective of electricity company is to provide the electricity to the people at lower cost. Without, sacrificing the profit. We need the profit. We need a reasonable return. Apart from that, we have to give the electricity to the public at lower cost. At lower cost. That is the public utility concerns. The major in this topic we are learning about electricity companies. They will follow double account system. So normally this public utility concern will adopt double account system. What is this double account system? It's a method of maintaining or preparing the financial statements. Don't confuse yourself with double entry system and double account system. Double account system is a special system of preparing the financial statements of public utility concern. That's the meaning of double account system. Why this double account word is given? Because they will prepare two balance sheets. Instead of conventional one balance sheet, these public utility concerns will make two balance sheets. That's why it is called double account system. Right? Conventionally, we will make only one balance sheet. In that balance sheet, we take all assets, all liabilities. But here, the balance sheet is divided into two parts. Right? That is called meaning of double account system. Now, features of double account system. The first feature of double account system is instead of one balance sheet, they will make two balance sheets. They will make two balance sheets. The first part of the balance sheet is called capital account or revenue and expenditure on capital account. It is called revenue and expenditure on capital account. The second part is general balance sheet. General balance sheet. The first feature of this double account system is two balance sheets are prepared. Second feature, in the first part of the balance sheet, we make the capital account. In this capital account, we will show, it is just like receipts and payments account. We will show from where the fixed capital has been raised and where the fixed capital has been applied, where it is spent, right? And the second part is all the other assets and liabilities that will be taken. That is the first difference. Then second difference is they will make revenue account and net revenue account instead of profit and loss account and profit and loss appropriation account. So normally trading manufacturing organization, they'll make two accounts, trading profit and loss account and balance sheet. That means profit and loss account, profit and loss appropriation account. But here in double account system, we'll make revenue account and net revenue account. Third feature is in this double account system, the assets will always be shown at the cost. Normally depreciation is deducted and the net WDV will be shown in the normal conventional accounting system. In the old accounting system, we take the fixed asset minus depreciation, we'll take the WDV, written down value. But in this double account system, we will not deduct depreciation from the fixed asset. Fixed asset always will be shown at cost. So what about the depreciation? Every year depreciation will be transferred to a fund called depreciation fund. The entry will be depreciation account data to depreciation fund account. The depreciation debited will go to revenue account, whereas depreciation fund, accumulated depreciation fund, will be shown on the liability side of the general balance sheet. General balance sheet, that is also one of the features. Next feature is regarding the interest. The interest paid on loan, the interest paid on debentures. Normally these interest charges in our traditional conventional financial statement will take this in profit and loss account debit side. It's a charge on the profit. But in this double account system, the interest on debenture, interest on loan, this will not be taken in revenue account. It will be taken in net revenue account. Net revenue account has an appropriation. That is also one of the difference. Then lastly, all the funds like reserve fund, contingency fund or different types of funds are there. All these reserves will be shown on the liability side of the general balance sheet. Then after making the capital account, the total of expenditure and total of receipt, the total of expenditure will be shown on the asset side, general balance sheet. Total expenditure will be taken on the asset side, whereas total receipts will be taken on the liability side of the general balance sheet. The main purpose of this double account system is the public utility concern must give full detailed information to the public regarding the raising of fixed capital and where it is applied, how it is applied. So these are some of the features of double account system. Now differences between double account system and single account system. These things will be asked in examination in theory question. In theory question, you may get a theory question like, what is double account system? What are the features of double account system? After watching this video, definitely you will get the points. You can write in your own words regarding double account system and features of double account system. Now, what are the differences between single account system and double account system? Actually, single account system is the conventional method of making the financial statements like trading profit and loss account, profit and loss appropriation account and balance sheet. So first difference is only one balance sheet will be prepared in single account system. Two balance sheets are prepared in double account system. That is the first difference. Second difference, in single account system, we make profit and loss account and profit and loss appropriation account. In double account system, we'll make a revenue account and net revenue account. That is the difference. Next difference, you can see the interest paid on debentures, interest paid on loan. That will be taken on debit side of profit and loss account as a charge on profit. Whereas in case of double account system, the interest paid on loan, the interest paid on debenture will not be a charge on profit. It will be taken as an appropriation in net revenue account debit side. That is the difference. One more difference, in single account system, the depreciation will be deducted from the asset and the net amount will be shown in the outer column. In single account system, always written down value of assets will be shown, written down value after deducting depreciation. But here in case of double account system, depreciation will not be deducted. Depreciation will be kept separately. Accumulated depreciation. Depreciation fund will be taken on the liability side of the balance sheet, liability side of general balance sheet. Whereas every year depreciation will be charged to revenue account. The fixed cost of the asset will remain same in the capital account. That is also one of the difference. Next difference is regarding in double account system, the detailed information regarding fixed capital and expenditure of fixed capital will be taken in the first part, capital account. In single account system, everything will be taken in assets and liability in one balance sheet itself. So these are some of the differences between single account system and double account system. One more theory question regarding double entry system and double account system. Normally students and viewers will get confused that double entry and double account system are one and the same. No, lot of different. Double entry system is a method of bookkeeping. It's a method of accounting in which every transaction will have two effects, one debit effect, one credit effect. So whenever a transaction is passed, two accounts will be affected. One account debited, one account credited. That is called double entry system. So we will follow double entry system in every method of accounting, whether it is a single system of accounting or double account system. So even in double account system also we follow double entry system. The double entry system is a common method of accounting which is applied in every type of preparing financial statement, whether single account method or double account method. Now final accounts under double account system. See here, in the whole of this electricity final accounts problems, we divide it into three parts. The first part regarding the financial statements. The financial statements consist of revenue account, net revenue account, receipts and expenditure on capital account, and lastly general balance sheet. These are the financial statements. The starting 8-10 problems we will do on making these financial statements of electricity companies. The second part of this topic is regarding the disposal of surplus. The Electricity Companies Act has given the procedure how to dispose of the surplus. So what is surplus? What is the procedure of dispersing the surplus? That will do it in the second part. And the third part is replacement of fixed asset. There is a different method of replacing a fixed asset. Where a fixed asset has become outdated or discarded. So how to replace a new machine in place of the old machine? There is a new method here in double account system. So these are the three topics we have to cover up in this electricity companies. Now first we'll focus on final accounts under double entry system, double account system. Revenue account, net revenue account, capital account. It is the receipts and expenditure on capital account. Last one, general balance sheet. One by one we'll discuss revenue account. The revenue account is simply the operating account. That means the profit and loss account. Revenue account is just like the profit and loss account in our conventional accounting system. All expenditure we will take it on debit side. All incomes we will take it on the credit side. The incomes will be regarding the sale of current, sale of electricity, and other meter rent, etc. These are the revenues, these are the receipts, incomes. Expenditure, cost of generation of electricity, cost of distributing the electricity, and all operating cost will be taken on the debit side of revenue account. The revenue account is simply like profit and loss account. Debit side all expenses, credit side all incomes. The balance in profits, this revenue account will be transferred to next account, net revenue account. Net revenue account is just like profit and loss appropriation account. In this net revenue account, credit side, we take the balance of net revenue account coming from last year, balance brought forward from the last year, net revenue account balance. Then next one is the balance which is transferred from current year revenue account. Already we have prepared the current year revenue account. The profit or surplus getting from current year's revenue account will be transferred to net revenue account. So two items will be taken on the credit side of net revenue account. The two items are, the first item balance brought forward from last year, second current year's balance from revenue account. Debit side, we take interest on debentures, interest on loan, dividend paid, whether final dividend or interim dividend. Then balance will be transferred to general balance sheet. Remember this point, because this point we are going to apply in the coming problems. Suppose credit side we got the total of 10 lakh rupees. Net revenue account, credit side 10 lakh rupees. Now debit side, interest on debenture, interest on loan, and interim dividend, dividend paid. The total of the debit side comes to 8 lakh. So credit side we have 10 lakh, debit side we have 8 lakhs. 10 lakh minus 8 lakh, 2 lakh rupees is the balancing figure in this net revenue account. This 2 lakh rupees balancing figure will be transferred to liability side of general balance sheet. Liability side of general balance sheet. That's it. So revenue account we have completed, net revenue account we have completed. Now capital account, receipts and expenditure on capital account. This is the first balance sheet. In this receipts and expenditure on capital account, we take all expenditure on debit side and receipts on the credit side. We'll make an account. Actually, it's a balance sheet, but it is in the format of an account. It is in the format of an account. It shows just like receipts and debits. So debit side we take all expenditure, credit side we take all receipts. So on the receipt side, credit side, we make 3 columns. Receipts at the beginning of the year, receipts during the year, and total receipts at the end of the year. 3 columns we are going to make on the credit side. On the receipt side, receipts at the beginning of the year, receipts during the year, receipts at the end of the year. Total receipts at the end of the year. Similarly, 3 columns we are going to make on the debit side also, expenditure side. On expenditure side, 3 columns, expenditure up to the end of last year or beginning of the current year. Expenditure up to the beginning of the current year. Expenditure during the year, second column. Third, total expenditure at the end of the year. So first and second column add up, you'll get the third column. So 3 columns debit side, 3 columns credit side. We take the total of receipts and total of expenditure. The expenditure part will take all expenditure on fixed assets, land, building, machinery, equipment. All these items we take it on the expenditure debit side. The receipt side, share capital, debentures, loan, all fixed capital. The capital is in the nature of equity capital or in the nature of debenture. Even debenture is also fixed capital. So these receipts will take it on the receipt side. Expenditure, land, building, machinery, furniture, equipment will take it on the expenditure side. The total of the expenditure will be taken on the asset side of the general balance sheet. Asset side of the general balance sheet will take the total of expenditure. Now total of receipts, the total of receipts will be taken on the liability side of the general balance sheet. The receipt side total on the liability side of general balance sheet, expenditure side total on the asset side of the general balance sheet. That is the second part. Last one, general balance sheet. In general balance sheet, we take all the other assets and liabilities. The remaining assets and liabilities will be taken in general balance sheet. That's all. So these are the final accounts of electricity companies under double account system. Now, important provisions affecting accounts of electricity companies. There is some peculiarity regarding public utility concern. So particularly in the electricity companies, depreciation, separate some provisions are given under Electricity Companies Act, how to provide the depreciation. Similarly, contingency reserve. Different types of reserves are to be maintained by electricity companies according to Electricity Companies Act. One of the reserve is contingency reserve. So every year a part of the surplus earned should be transferred to contingency reserve. The provisions are given that not less than 1/4% of the original cost of fixed asset, not more than 1/2% of original cost of fixed asset should be transferred to contingency reserve. And how to use this contingency reserve, Company Electricity Act has given where we have to apply, where we have to use this contingency reserve. And the contingency reserve amount should be invested in securities that will be specified by the government. Then apart from that, general reserve, development rebate, development reserve, and tariff and dividend control reserve. So different types of reserves are there, giving how to maintain the reserve, how much to maintain the reserve, and where to apply those reserves. While doing the problem, I'll explain all these reserves separately. Now, calculation and disposal of surplus. Now, first part we have completed. The first part is regarding financial statements. The second part is regarding disposal of surplus. Second part is regarding disposal of surplus. I told you electricity companies are there to provide electricity to the public at lower cost. Its main objective is not to earn the profit, but they need a profit for survival. For operation, they need the profit. So apart from earning the profit, their objective is to provide the electricity to the consumer at a lower rate, at lower price. So for meeting that, electricity companies are given the provision that they have to earn reasonable return. The electricity companies should earn reasonable return for their survival, and the excess return if the company earn, that is called surplus. That means any income earned by electricity company over and above reasonable return, then that over and above reasonable return the company earned is called surplus. So how to dispose of that surplus? How to dispose of that surplus? The Electricity Companies Act has given the procedure. So first we need to calculate reasonable return, then we have to calculate the clear profit, then we'll get the reserve surplus, then how to dispose of the surplus. That is called calculation and disposal of surplus. See, surplus means clear profit minus reasonable return. That means actual what the profit the company has earned. From that we deduct the reasonable return. We'll get the surplus. So how to calculate reasonable return? We have to calculate capital. We have to calculate capital base. Calculate capital base. So capital base is the first calculation to find out reasonable return. So how to calculate capital base? We'll take original cost of fixed asset. From this we deduct contribution by customers. The electricity companies has made the customers compulsory to contribute some amount for fixed asset. So if contribution is received from customers on account of fixed asset, that will be deducted. Then cost of intangible asset, original cost of WIP, then contingency reserve investment, average working capital excluding debtors. You have to remember these items because this format is given by the Electricity Companies Act and we have to apply this format in the problems. The original cost of fixed asset minus contribution from customers, cost of intangible asset, original cost of WIP, contingency reserve investment, average working capital excluding debtors. Take the total of this. From this total subtract depreciation on fixed assets, amount written off on intangible asset, loan from electricity board, security deposit from customer, debentures, balance in development reserve, balance in customer benefit reserve, balance in tariff and dividend control reserve. Deduct all these items from the total, then we'll get the capital base. This procedure we apply for calculating capital base. Once we get the capital base, then we calculate the reasonable return. So reasonable return मालूम करने के बाद ही we can be able to get the surplus. So how to calculate reasonable return? Return on capital base. After calculating capital base, return at what percentage? Bank rate plus 2%. Whatever bank rate is there, on that 2% we add. If bank rate is 10%, we add to 12% on capital base. Then income from investment other than contingency reserve investment. Contingency reserve invest, two types of investment are there. Contingency reserve investment and other reserve fund investment. So we take return on reserve fund investment, not contingency fund investment. Then 0.5% on loan from electricity board, 0.5% on debentures, 0.5% on balance of development reserve and reasonable return. We'll get the reasonable return. After calculating reasonable return, calculation of surplus. Take the clear profit minus reasonable return. We'll get the surplus. So this is the procedure of calculating reasonable return. First we need to calculate capital base, then we get reasonable return. After that we'll get the surplus. Then how to dispose of the surplus? I'll explain you. So I have explained you regarding the financial statements of electricity companies. Totally three parts are there. The first part I have explained you regarding the preparation of financial statements. It consists of revenue account, net revenue account, capital account, that is receipts and expenditure on capital account, lastly general balance sheet. These four constitutes the financial statements which every electricity company will make in India. So this is the first part. So how to make the revenue account, net revenue account and capital account, general balance sheet, all these things in the next video I am going to solve the problems on financial statements. The second part is disposal of surplus. I told you Electricity Companies Act, the objective is not to earn the profit. That is secondary. Profit is necessary. It doesn't mean that without profit motive they are there for service, provide the service. No company can survive ignoring the profit. At least minimum profit we require to maintain the activities, to conduct the activities. So here electricity companies also, the main objective is to provide electricity to the public, to the people at lower cost. That is the objective, without disturbing the reasonable profit. The Electricity Companies Act says whatever surplus, that means actual profit minus reasonable return. Example, in a particular year, the actual profit is 10 lakh, whereas reasonable return is 6 lakh. The reasonable return only 6 lakh rupees, whereas actual profit earned is 10 lakh. So excess 4 lakh rupees is called surplus. And this surplus, how it should be disposed of, that is given in the Electricity Companies Act. How to dispose of the surplus, right? That is the second part. We will solve few problems also on doing this disposal of surplus. So for finding out the disposal of surplus, first of all we need reasonable return. So how to calculate reasonable return? Electricity Act has given the procedure. And before calculating reasonable return, we need to calculate capital base. In the last video I have explained you regarding how to calculate capital base. On that capital base we calculate the return on capital base, then return on investments other than contingency reserve investment, then 0.5% on debentures, 0.5% on development reserve, 0.5% on loan from electricity board. All these things total together constitute reasonable return. After calculating reasonable return, deduct reasonable return from clear profit. So remember, clear profit minus reasonable return, you will get the surplus. Again I repeat, clear profit minus reasonable return, RR, you will get the surplus. Now I am going to explain you how to dispose of the surplus. What is the procedure given by the Electricity Act? So here, disposal of surplus. The disposal of surplus can be done with the help of the following steps. First step, calculate 20% of reasonable return. RR stands for reasonable return. So first step, calculate 20% of RR and keep it separate. That will treat it as, call it as A. We call it as A. So what is A? 20% of RR, reasonable return. Second step, calculate 5% of RR, reasonable return. We call it as B. Then calculate 1/3 of A. Whatever A you get, you multiply by 1/3. Multiply into 1/3. So 1/3 of A, call it as C. Now we are having A, 20% of RR, B, 5% of RR, C, 1/3 of A, that is C. Now fourth step, B or C, whichever is lower, is free use for the company. Free for any use. B or C, whichever is lower, is free for any use. That means we have to compare this B and C. Whichever is lower in these two will be treated as D. Will be treated as D, and that is free for any use to the company. The Electricity Companies Act says B or C, whichever is less should be given to the company for any use. The company can make any use of this D point. Now surplus minus A, transfer to consumer rebate reserve. Surplus already we got it. From surplus deduct A. So surplus minus A, transfer to consumer rebate reserve. Now calculate A minus D. Calculate A minus D. So half of A minus D will be transferred to tariff and dividend control reserve. And again half of A minus B, minus D, half of A minus D will be transferred to consumer rebate reserve. That's it. So this is the procedure of disposal of surplus. First you need to calculate capital base. Then you need to calculate RR, reasonable return. Already I told you in the previous video, and in the problem we are going to apply the technique of calculating the capital base, calculating the RR. After calculating reasonable return, calculate the surplus. Clear profit minus RR will get the surplus. How to dispose of the surplus? These are the steps. First A, calculate 20% of RR. Second, 5% of RR. C, 1/3 of A, treat it as C. Then B or C, whichever is lower, call it as D. That is for free use of the company. D ho gaya? Now surplus minus A. Surplus minus A, transfer to consumer rebate reserve. Now calculate A minus D. Half of A minus D transfer to tariff and dividend control reserve. Half of A minus D will be transferred to consumer rebate reserve. That's it. So this is all about disposal of surplus. Right now we'll get some idea. This explanation will be put into problems, practical problems in the coming video. Now, replacement. Two parts we have completed. Preparation of financial statements and disposal of surplus. The last and final part is replacement of asset. Now see here. In case of single account system, whenever an asset has to be replaced, that means a new asset has to be purchased, it's very simple. The old asset will be sold off. Any profit or loss arising on the sale of old asset will be charged to revenue account, profit and loss account. Example, one machine of 5 lakh rupees was there. It was sold for 4 lakh. The machine is gone. 1 lakh rupees is the loss on sale of machine because 5 lakh rupees is the value and we sold it for rupees 4 lakh because we want to purchase a new machine. We want to purchase a new machine. That's why old machine we are selling. The 5 lakh rupees machine sold for rupees 4 lakh, 1 lakh rupees loss. That 1 lakh rupees will be charged to profit and loss account. And the new asset will be capitalized at its full value. After selling of the old machine, A new machine for rupees 8 lakh will be purchased. So completely 8 lakh rupees will be capitalized. That is the normal procedure in single account system. But in double account system, the procedure is different for replacement of an asset. If an asset has to be replaced, a specific procedure is given regarding replacement of asset in double account system. Briefly, I'll explain you that procedure, and this procedure we are going to apply in the coming problem. So then the problem will be more clear. Right now, to have a bird's eye view, I'll give you the steps for replacement of asset. The original cost of the asset being replaced is not touched. It continues to be shown at full value even after its replacement. Example, the old machine is value of the old machine is 5 lakh rupees. Now the electricity company wants to replace with a new machine of that old machine. The old machine has to be scrapped and a new machine has to be purchased, replaced. What the electricity company will do? The old machine of 5 lakh rupees will not be touched, will be kept as it is, even if it is scrapped. Even when it is scrapped, the old value should not be touched. It will continue to be same as rupees 5 lakh. Second step, the present estimated cost of replacing the old asset is ascertained. Now we will calculate the replacement cost. What is meant by replacement cost? What is the cost of that asset if we purchase now? We have purchased the old asset some 15 years, 20 years back. The old machine was purchased some 10 years, 15 years back. At that time, its cost was 5 lakh rupees. Suppose if we purchase a new asset of the same specification, how much would be the cost? That is called replacement cost. So naturally, the replacement cost will be higher than the original cost because of inflation. The prices of as goods and commodities have gone up. So earlier we have purchased for 5 lakh. Now that asset will not be available for 5 lakh. You have to spend more amount. So that is called replacement cost. What is the cost of the old machine at the present value? Then it is the cost of acquiring the same asset at the current rates. This value is higher than the original cost of the asset as the prices have gone up. The first step, keep the old asset at its original value as it is, intact, no change. Second, find out the replacement cost. What is the cost of the new asset of the same specification if we purchase right now? Third, from the cost ascertained as above, replacement cost already ascertained, the sale proceed of old material or the value of material reused in constructing the new asset is deducted. From the replacement cost, we deduct the scrap value received. The old material was sold away. Some scrap is realized from the old machine. Or if the old material is reused in constructing the new asset, these items will be deducted from the replacement cost. The residual amount so obtained is debited to replacement account. Replacement account, an account is opened called replacement account. Then the balance of this account is written off to the revenue account. Then the difference between the actual cost of the new asset and the estimated replacement cost is capitalized. We'll find out what is the actual cost of the new asset. The actual cost of the new asset. From that, we deduct the estimated replacement cost. Already we got the estimated replacement cost, that will be deducted. Remaining amount of the asset will be capitalized. So all these steps I am going to apply in the coming video while solving the problem on replacement of asset. Now what are the journal entries to be passed in case of replacement of asset? For the amount spent on new works. For the amount spent on the new works, entry will be new works account data, replacement cost account data to bank. Second entry, for the sale of old material, bank account data to replacement account. For old material used in constructing the new asset, new works account data to replacement cost. Then for amount spent in creating new asset, new works account data to bank. Last, for transfer balance in replacement account to revenue account. So revenue account data to replacement cost account. These are the entries to be passed at the time of replacement of old asset by a new asset. Second part completed. Third part, sorry. First part, preparing the financial statement. Second part regarding disposal of surplus. Third part regarding replacement of an asset. Last and final part is repairs and renewals. Repairs and renewals. See here. In electricity companies and any public utility concern, a major part of the capital is spent on fixed assets. Spent on fixed assets like machinery, equipment, etc. When machinery, equipment is used, there is a lot of repairs and renewals. Every year, lot of expenditure have to be spent on repairs and renewals, and these repairs and renewals will be charged to revenue account. Whatever one year repairs and renewal expenditure, that is an operating expenditure that will be charged to revenue account. But the problem is the repairs and renewals will not be uniform throughout the life of the asset. Example, a machine is purchased for rupees 5 crore. 5 crore. A machine is purchased for rupees 5 crore, 50 million. So the life of the machine is 10 years. So do you think that the repairs and renewals will be uniform throughout the period of 10 years? No. When we purchase a machine, in initial years, the repairs and renewals will be less because the machine is new. It does not require much amount on repairs and renewals. But as the machine becomes old and old, then what will happen? The repairs and renewal charges will increase. That means repairs and renewals are not even throughout the life of the asset. In the beginning years, repairs and renewals are less. Later on, when the machine becomes old, repairs and renewals will increase. That means it will have a big impact on revenue account, because repairs and renewals are charged to revenue account. So in the beginning, less repairs and renewals, so more profit will get, more surplus will get. Later on, after a period of time, when the machine becomes old, repairs and renewals charges will increase. In that case, what will happen? Profitability will come down. So this will have a negative, adverse impact on profitability. To overcome that, in double account system, one method is applied called repairs and renewals reserve. An account is opened called repairs and renewals reserve. So how it will be operated? See here. First of all, the electricity company will decide how much is the estimated repairs and renewals throughout the life period of the asset. They will calculate the life of the asset is 10 years. What is the estimated repairs and renewals required over a period of 10 years? Full life of 10 years. Then that will be divided by 10 to get the average repairs. Example, the electricity company decides that the repairs and renewals will be, let it be 10 lakh rupees during the 10 years life. During the 10 years of life, 10 lakh rupees is the repairs and renewals required. So per year, how much? 10 lakh divided by 10, 1 lakh. So every year repairs on an average repairs and renewals required is 1 lakh. So what they will do? They will pass an entry repairs and renewals account data to repairs and renewal reserve account. Repairs and renewals account data to repairs and renewal reserve account. This entry they will pass every year for the same amount. And these repairs and renewals will be charged to revenue account. Revenue account debit side will take repairs and renewals 1 lakh. And the amount is credited to repairs and renewals reserve. Now actual amount spent on repairs and renewals will be debited to repairs and renewal reserve account. The entry will be repairs and renewal reserve account data to bank. Repairs and renewals reserve account data to bank. Every year this is the entry for actual expenditure incurred on repairs. The balance in repairs and renewal reserve will be shown on the liability side of the general balance sheet. On the liability side of the general balance sheet. This is what I have explained here. So this method they will follow in electricity companies regarding repairs and renewals. Calculate repairs and renewals throughout the life of the asset, divided by life, will get an average. Every year the same repairs and renewals amount will be charged to revenue account. Actual amount spent will be debited to repair and renewal reserve account. The balance in repairs and renewal reserve account will be shown on the liability side of the balance sheet. That's all. So in this video, I have explained you the complete detail regarding electricity companies, public utility concern. So how to make the financial statements, how to dispose the surplus, how to replace the asset, and repairs and renewal reserve. This is the complete theory. So next video, I am going to start the problems on these electricity company financial statements. Keep watching the video. Increase your knowledge by watching the video from beginning till end. Don't skip in between if you want the complete command on the subject. Start watching the video with an ambition to gain the knowledge, not simply to pass the examination. Again, I will tell you, whatever videos I am making, I'm intending that students are watching my video with the aim to increase their knowledge, not simply to pass the examination. Don't keep your narrow objective of passing the examination. We can easily pass. Having the degree is not a great thing. Increase your knowledge, good command on the subject, increase your power of knowledge. That makes the sense. So, if you are satisfied with my video, give a like, share it in your friend circle group so that more students can watch these videos and increase their knowledge. Give your comments regarding these videos, and don't forget to subscribe my channel if you have not yet subscribed. We'll continue the problems on electricity companies in the next video. Till then, goodbye, take care.